There's a small cap energy stock that's quietly exploded over 300% with massive call inflows catching Wall Street's attention. The stock is EOSE Enterprises, ticker symbol EOSE, and today we're breaking down why the run to 17 might just be the start and whether you should buy. EOS Energy is currently trading at $17 a share, and it's even at $18 in the pre-market. Their main goal is building long-duration zinc-based energy storage systems, which are essentially grid-scale batteries that can store renewable energy for hours, not minutes, like other batteries. Unlike lithium ions, Eon's technology uses abundant zinc and doesn't rely on critical materials like cobalt or nickel, giving a strategic cost and supply chain edge. As the US grid shifts to renewable energy, I think long duration storage is one of the most critical bottlenecks, and EOS is one of the few domestic players positioned to solve it. As we can see here on the screen, it is the problem here is really that the gap in ensuring grid reliability, especially for these long periods of time, it's hard because of the aging infrastructure, transmission constraints, and slow interconnection processes for the new projects. And this is why EOSE comes in, and they really save the day on this, especially as a domestic player. They have been on an absolute tear the last few months. The stock surged from $4 in late summer to nearly $17, which was driven by the improving fundamentals and a wave of speculative momentum. And here's where things really get interesting. Yesterday, I saw this on Reddit. One of the most active options list, EOSE, saw 340,000 total option contracts traded in a single session. That is absolutely insane for a stock which is still at such a low market cap. And the main thing I want to point out is that the call to put ratio of zero point 0.2. This is absolutely insane if you're looking at it from 282,000 calls versus 57,000 puts. That is a crazy ratio, and it's really signaling that overwhelmingly the people are buying calls, which is betting on more upside with the options volume of 246% of the daily volume. This kind of volume is not normal for a small cap energy name, and it signals that big money and momentum traders are starting to pile in, as well as institutions that are trying to get in on this massive move that will be coming up in the next few weeks as well as months. So another thing I want to point out, let's break down the fundamentals that are driving this rally, and I think what you want to look for and whether it's still a buy or not. The massive market opportunity. Long duration storage is projected to be a multi-tens of billion market by 2030, driven by the IRA incentives, grid updates, and renewable mandates. Here we can see a prediction of 8.61 billion by 2030 at a cost growth revenue 15% during the forecast period. This is absolutely insane growth, and it will be reflected in the PE ratio as well as once this starts to scale. One other thing I want to point out is that they're made in the USA. Their manufacturing aligns perfectly with the Inflation Reduction Act tax credits, which gives them domestic producers a serious edge over foreign competitors and is driving business into the United States of America, and it's making others want to join. As well as this, we've seen the growth is really astounding because they're able to generate up to 90 million annually in 45x production tax credits, which is absolutely massive when you consider a company that's this small. Another thing I want to point out is how the company has reported a substantial increase in backlog orders, with growing interest from utilities seeking to diversify away from lithium. Not only this, but the production scaling. EOSE's factory expansion and semi-automation could significantly lower their unit costs, which could be a key inflection point. Another thing I recently saw on Reddit, EOSE is explicitly listed as the preferred battery supplier for the 100 billion Robina megasite AI data center. This is absolutely massive news, and it shows that there's a lot of belief inside the stock, and that we could see with this really high short interest and the recent run up and the heavy call buying, there is a potential short squeeze amplifying after every day we've seen all these green days. And I think that's where I'm driving into the main argument. The short interest is insane, with over 30% of the short interest in the float. One other thing I want to point out is that there's not much analyst coverage limited, but there is retail sentiment, and it's heating up very fastly. I made my own DCF model before this video. I was able to get myself from this $17 stock price to a 26 by the end of the year, and I think that is still pretty bearish because the possibilities are really endless for this because it could be the next clean energy biggest company in the United States. And the options flow confirms it because there's institutional sized call blocks that have shown up over multiple days. And that's really often we could see smart money positioning itself earlier before news or continued technical momentum. And here's the subreddit and the stock twits. We've seen sentiment all in the bullish, and we've seen that it's one of the main stocks that a lot of people are going to be holding and looking at in the next few months coming up. Looking at the technicals now, EOSE broke through the resistance level around $10 a share, which triggered a wave of stop-ins and call hedging activity. This led to this kind of reconsolidation period, and the next major zone I saw was at the $17 to $18 mark. But in the pre-market, we already tapped it. But in this, if the stock consolidates above 14 to 15, which is this line I drew right here, this little dotted line, if it consolidates here, I think it could set the stage for a secondary leg higher into the 20s. And the volume has exploded on the breakout, which is validating the move very, very much so. The 246% option volume spike also supports the idea that this is not a dead cat bounce, and it's momentum with conviction that is leading people to invest the money, big institutions to invest their money into this company because they see the future of renewable energy, and that it is really going to be EOSE in the next few months that we see continue to grow. For me, EOSE is at this strong inflection point where we've seen the momentum is continuing to grow. So we've confirmed it with the volume, and we've identified the strong price action. All right, so we've kind of reconsolidated. I think this is right about where we are on the chart. We had a little pullback, but now we're on this part where there's lots of momentum, and it's really just going to be upwards momentum that pushes us up until the trade kind of slows down. For me, EOSE, though, is one of those high risk, high potential asymmetric bets. I personally have 1,000 shares of EOSE because the technology is differentiated. That's the main thing I want you guys to walk away from this video knowing. The market tailwinds are real, and the option activity suggests something bigger may be brewing behind the scenes that we don't know about. If momentum sustains and the company executes on its backlog, this could evolve from a $17 stock to over 100 in a year or two. So I think while EOSE is not for the faint of heart, it's volatile, it's very speculative, and it's still small in terms of scale compared to other companies in the market. I think the recent run to 17, the massive call inflow in the structural energy transition is what makes this stock one you have to watch very closely in this year and the next year. Because this could just be the first inning of a much bigger story. And as I showed here, the asymmetrical risk, here you're having such larger upside than downside. And I think you could still find an exit even if there was downside. So that is my main points. If you guys have any comments, drop them down in the comments below. Make sure you guys like, subscribe. Thank you guys for watching. Peace.